Welcome to Q&A Selling Online, with answers to questions about creating an online empire, promoting products, or building a brand. Your host, private label and e-commerce entrepreneur, Quinn Amorm.
Welcome back to the podcast, my friends. Today we have with us Nacham. He's the founder of ConnectBooks that has processed over 4 billion in Amazon transactions so far. He is the go-to guy when sellers want real clarity in their businesses. Nacham, how's it going today?
Great. Thank you for having me on your show today.
Well, it's a pleasure having you here. I hope I didn't butcher your name. I practiced before even recording. So did I say it right?
Yes, you did.
Okay, perfect. So can you tell us, first of all, a little bit about yourself and how you got started into this world?
So as 7-8 years ago, I started my career, more than 9 years ago, I started my career in the accounting field. Mm-hmm. And I got a job I started first as a bookkeeper of a large wholesale business. They had a warehouse of 150,000 square feet, and they had a lot of inventory there. And they had very complex inventory, like putting together kits, bundles, like all these kind of weird stuff. They weren't an Amazon seller, but, they had a huge complex inventory. I started off there. I grew into the position as being the CFO of the business and, had a couple of bookkeepers under me working. At some point, I decided I want to go on my own and have my own business. So I started a bookkeeping company. So when I left that position, meanwhile, I was also actually in school and I made sure to finish my school. I did graduate school with a master's degree in accounting. And after I finished school and I decided I want to open something on my own, I started a bookkeeping business. So the bookkeeping business was more like to do bookkeeping, but like on a very advanced level / CFO services for small to medium-sized businesses. So we have small businesses or medium-sized businesses, they don't want to deal with a bookkeeper or they want more advanced bookkeeping. They want to make sure everything is done right and, decide to have somebody in the office who actually takes care of them and knows how to do bookkeeping, and then have a person like me looking over the books, training in the bookkeeper, whatever is necessary. So I started off that kind of business, and then I was looking for more business and I bumped into a couple of Amazon sellers and they were telling me that they're having a very hard time in figuring out their profits. So it wasn't just figuring out profits. There was 2 partners in the business and they were a private label and they wanted to know from let's say 5 products belong to partner A and B and then additional 5 just belong to partner A. So they were like, we need to know how much profit we made and then how much profit we made per product in order that we can split accurately. So I sat on that account. I had to do for 2.5 years worth of bookkeeping. It was kind of a mess all over. No bills, nothing was done. I had to start from scratch, and it took me a good half a year, say a good 4 to 6 months to put this whole picture together. And then I spent a lot of time also on, getting data from Amazon and downloading the reports and sorting everything and putting everything together. And then I was if I was thinking to myself, I see there's an opportunity here for good bookkeepers in the Amazon field. There isn't that many, and people are complaining, and people need somebody with the right expertise. So I figured, it's something that I can, expand on. So I had a friend who was a programmer, and I asked him about building out such a program, which basically takes a lot of my work and automates it. And he actually told me he can do that for me. So first, my initial thought of doing ConnectBooks wasn't so much of selling the program out to the public, it was more of expanding my bookkeeping services in the Amazon field. And I'll have this product to make it easier for me. But then I saw what I'm building is actually a lot of other companies can just use it, not just my bookkeeping clients. I can just sell it to regular people and just charge them a monthly fee. So that's when we took the whole product and we turned it into a SaaS application. We're selling it out on a subscription base. And, we say, that's how the whole idea of ConnectBooks started.
Beautiful. And you know what? The reason why you started this is something that I've suffered with so much. It's the nightmare of sharing in one of your accounts, having a partner that doesn't own all of the products, right? You're sharing profit of some of the products, but not all of it. Doing those calculations is a nightmare. And I mean, I did study accounting actually in Europe. I didn't finish, but I studied accounting, economics, and financial calculation. And I cannot stand numbers anymore. I mean, I know my numbers in the business, if I'm profitable or not. That's something I always need to know. But doing accounting, I learned to maybe hate it because when I signed up for this, it wasn't what I really wanted. So then I was in it. I had to, go and finish a few more years, and I just couldn't wait to get out of it. So I can understand.
kind of feel your pain. I wouldn't want to go back to school again. I did it once, and that's it.
There was one thing, because I studied in Europe. There was one way. It's called the technical professional of accounting and economics. And it's an accelerated way of getting, instead of doing your degree in 4 years, you get it in 2. So instead of just taking random classes, you have 8 or 10 hours a day of classes for 2 years.
Wow.
So I figured that would be the best way to get it over with. And no, after a while, it's like being in a job where you don't get paid and everything is boring for years. So
it's school is tough. It's hard. A lot of people, fall through it or stuff like that. The thing about me was that I, took out student loans and I'm paying for it myself. It's not like, anything. And that really I was like, okay, I put so much money into this. I just better finish. Mm-hmm. But I didn't even go afterwards for my license. I just, decided I'm just good with the degree and I'm just going to move on.
Yeah. Well, fortunately, I didn't get a student loan. In Europe, things are a little bit different. So student loans are not something very common. Plus, after the age of 16, I had started a fast food company, my own restaurant, and that I mismanaged. Let's just put it out there. I mismanaged it because 16 till probably 19, I owned it, and I thought every single cent you make goes into your pocket, and you use it now. You go party with it. And it doesn't work out that way when your vendors want to get paid.
Oh my God. I see this sometimes still today. We get involved in certain companies. One of the things when I get involved in a company and bookkeeping, we always try to get our numbers clear. We try to see what is the overhead rate. One of the good things I took with me from school is what's your break-even point? What is your contribution margin? If you're making this year $500,000, maybe you could have made $1 million. So how do you know that you maximize your profits and maximize your potentials? That is when you know that, okay, my overhead is X, and in order for me to break even, let's say I got to hit $1 million, and then anything above that, my contribution margin, let's say, is 10%. So if you hit above 2-3 million, you'll make X amount. You'll make based on the percent. But it's if you have your numbers solid and you're down and you go over your overhead once a quarter and make sure everything is done right, you're definitely on the way to make a lot of money.
Yeah, definitely. That's definitely the way to do it. So, Nacham, have you ever sold on Amazon yourself?
No, never sold on Amazon.
Okay. So you're the numbers guy, and you have the software that does the numbers for everybody else, because it is so painful in Canada. Is not as hard as in the US, right? Because it's just you don't have all the different states with different taxes that I don't even understand that part. So
that's easy. I think in Canada it's more complicated actually today.
Yeah.
Because today Amazon takes care of the sales tax. Most states, it depends where. Certain states not, but here in New York, where I am located, in New York already Amazon collects. California was the biggest nightmares. Amazon already collects. A lot of states in the US, Amazon collects for you and they give it. I actually have a lot of customers in Canada. We're forever busy. They're doing these reports to get back money from the government, and they have to go through all the Amazon stuff and split it between Quebec and and Canada. And I'm not sure exactly what they're doing there, but they're putting in all the Canada taxes, and then they collect their refunds every month or so.
So now that we've been into this now for a few minutes, why don't you tell us a bit of what exactly QuickBooks it's not QuickBooks. It connects to QuickBooks, but it's ConnectBooks. What does it do, and how does it do it? It's connected to QuickBooks, I believe.
Yeah. So I'll just explain and give a little bit about the program. So The first thing about the program, what sets us apart from everybody else, is that I'm not an Amazon seller. I'm actually an accountant. My expertise is accounting, and my expertise is understanding, giving clarity in your business and making sure the numbers are right and the numbers are clear for you to understand. If you made money, you want to see where you made money. If you lost money, you want to see where you lost. So a lot of times, there's a lot of different programs out there that I've seen. Like, let's say programmers decide, they're like, okay, let me make some good program that I can sell and, go public. I don't know what. Everybody dreams when they make a program. And what happens is that they don't evaluate if there's a correct need for the market or what the need is. And when they build it in a way where, from a programmer perspective, I'm not a coder. I don't know how to code. But this program was built by an accountant. And we had one goal of mine, is to give you clarity and give you accurate books. So the build of the program, the goal of the program, how the program is oriented is more from a complete different perspective, where we want to focus on giving clarity and setting up your books right. So what we do is ConnectBooks would integrate directly to Amazon's API. We pull all the data from Amazon, we bring it into our database, and then once you sign up, let's say you create yourself an account and you speak to the sales rep. Afterwards, you would get an onboarding setup with a bookkeeper. The onboarding setup with a bookkeeper would be with someone who has a lot of experience. These people get a very thorough training, and they know exactly how to do bookkeeping, what to do when and where. And they would walk you through the setup and make sure that you understand the integration part between ConnectBooks and QuickBooks. So it's important, but also it's very important that we make sure the client gets the right setup. There's a lot of different features we offer, whether it's kit items, bundle items. One of the things is, in terms of Amazon, what I would say is the biggest silent killer in Amazon is inventory. You can do, let's say, $10 million in sales a year, and you could show $1 million profit. Now, you could be carrying $4 to $5 million in inventory at year end. So if you're carrying $4 to $5 million inventory, you're showing $1 million profit, and let's say $600,000 of that inventory is obsolete. You got to write off that 600. So your total profit is really down to 400,000 or 300,000. So it's important to have the numbers accurate in terms of inventory and in terms of getting, the books the right way, up and running. So what we do is when we set up the QuickBooks, one of the things we focus is you understand how inventory works and understand how the products get transferred into QuickBooks, whether it's a kit item, whether it's a bundle item, whatever it needs to be, we set it up properly. So that's something that we focus a lot, and that's how your numbers are accurate, the right way. Once you have the whole onboarding setup complete, and then you can start exporting your settlements, and it's basically just a click of a button. When you send the settlements to QuickBooks with one button, it's all there. We also have on our website, we have reporting. So what happens is, besides getting all your data into QuickBooks, you want to start seeing profitability per product. You want to dig into each product. So our reporting on our website is very unique. We'll show you every single product, how many sold, how many returned, how many got reimbursed. We'll show you all the sales, all the Amazon fees. We'll break down the PPC spent per product. We'll break down the storage fees per product. We'll break that all down. And then we'll also pull the cost of goods sold per product from QuickBooks. So what happens is, we'll go to QuickBooks and we'll take from each product and look how much you paid for it and bring it in. So we'll give you a complete picture on our website, exactly how much money you're making on each product. So you won't have to sit in QuickBooks and dig through each product, which makes it kind of difficult, because the report that you need in QuickBooks to determine profitability per product is not there. Because when you run a regular sales by item summary, it tells you, okay, this product sold for $100 and your cost was $20, so you made $80. But you still need to calculate PPC. You need to calculate cost, the Amazon fees, the commission fee, the fulfillment fee. So the way we set it up on the website is where we give you the whole picture together, and then you could just see everything very easy, very simple.
Okay, so that makes a lot of sense. And in the past, I have tried tools that, for example, wouldn't have an input, or manual or automated, didn't have an input for external costs. Basically, the tool would connect to Amazon and would tell me only what my costs were on Amazon, right? Now, of course, I have to ship things to Amazon, sometimes from a different country, so I can't use, Amazon doesn't charge me for that. I have to get charged by a third-party company. With your tool, if I have external expenses, I can at least manually input my expenses?
Yeah, so we have it now set up very enhanced, meaning we have a couple options. First thing is, if you want, you can go to the website and go to each product. You could put in a cost. Let's say you pay for a product $2. You put in that you paid for the product $2. Then if you want to add on additional cost, we have something called prep cost, where you can add on, let's say I paid additional $2 to prep the product. So this is how we keep the two things separate. Like, let's say, for example, the cost of the product goes up. Instead of $2, it's now, let's say instead of $2, it's now $2.50.
Yeah.
And you see that your cost was $4. So you want to understand, like, what did I allocate before? So the prep was $2 and the cost was $2. We also have that we can pull your cost from QuickBooks, and then you can also add on a prep cost. That means to say, a lot of people, when they're doing their bookkeeping, like, let's say you're paying trucking, they're not going to go every single freight bill and allocate it to a product. So what they do is they take all the freight, they just enter it into QuickBooks. And then when they purchase a product, they enter that as well. So what we do is we pull from QuickBooks, let's say this product costs $3, we'll pull the cost from QuickBooks. And then let's say you make a calculation and you come up that, okay, this product, the shipping and the freight is approximately, let's say, $1 per product. So what you could do is you could go to ConnectBooks and just add in the prep cost. So what we'll do is when we'll calculate your cost of goods sold, we'll put in your estimated prep cost, and plus we'll take the actual cost from QuickBooks. But we won't send the prep cost to QuickBooks in order to avoid double accounting issue. Meaning to say, because you already entered those prep costs as regular expenses, whether it's going to be labor or like shipping or stuff like that.
Okay, so one of my issues was for example, the cost of the product when I purchase it. It's not always the same, right? So I can input in certain tools and say my product cost me $6.50, but I ordered 20,000 of those. And now next month when I need to order again, I may order 50,000. And because shipping is different and everything, the cost per unit, my landed cost, is not going to be $6.50. Now it can be, $6, for example. So is there a way?
So for that, we have two options. The easier option is to go on the website and take each product and put in like a start date and an end date. Mm-hmm. You can take a product and say that this month I paid this amount of money. Last year I paid, let's say, $650. Now I'm paying $750. Now what happens is, let's say, for example, last month you purchased 600 units at, let's say, $2 a piece. Now you purchased additional 900 units at $3 a piece, but you still have like 100 pieces left of your previous batch. So then it kind of gets a little bit complicated. We're working on an update to be able to calculate that as well on our website. But when you track inventory in QuickBooks, QuickBooks constantly keeps on updating your average cost. So QuickBooks keeps track of it. So if you're doing through QuickBooks, we would rely on the number that we get from QuickBooks, and that's how you would avoid this issue of having, the costs going up and down.
Gotcha. And could I use ConnectBooks in, let's say, Amazon Europe, Amazon Japan, USA?
Yeah, we do US, Canada, Mexico, Japan, UK, all the marketplaces. And one of the benefits that we have above, I would say, any other software, I haven't seen anyone else have this, is we calculate the exchange rate as well. So what happens is, let's say, I'll talk from a US perspective because that's our main clientele. So we have a lot of U.S. sellers, and our U.S. sellers that they sell in Canada. So what happens is let's say the Canadian dollar to the Canadian is like, the dollar is like something like usually around 0.75 to the Canadian dollar. So what we do is each disbursement, it depends really if you're going to be using Amazon to do the disbursement or you're going to use it to Payoneer. But if you use Amazon to use disbursement, then each settlement comes through to us with an exchange rate. So what we would know is we would say, okay, this is the amount sales you did, and this is the exchange rate. Now, what we would do is we would take all the sales and all the fees and calculate it based on the exchange rate. So what happens is, let's say you live in the U.S. and your cost is going to be U.S. dollars. Your usual problem is that you want to know how much sales in the U.K. or in Canada you did, how much equivalent that would be in the U.S. dollar. So what you do is you go to our report, and you would have an option to see it in the home currency or based on the conversion currency. And after you do it in the conversion currency, we would convert all the sales to the converted currency, and your cost is going to stay the same what it is. So you'll be able to see your accurate profit and loss per product on ConnectBooks.com. Besides the point that you can see it in QuickBooks, whether you want to use multi-currency or not use multi-currency, we have multiple integrations on that as well.
Yeah, that's beautiful. Now, one other thing I just thought of that other tools that I have tried were missing was that they do not have a look at how much I owe Amazon. Because, for example, I don't know, at the time of this recording, I owe Amazon around $200,000 for the Amazon loans, right? Does your tool account for that for the Amazon loans too?
So when we export the stuff to QuickBooks, we account for it. Meaning to say, on the website, we won't show it to you because the website reports are profit and loss. A profit and loss means income and expenses. That wouldn't account for any type of loans or receivables that you have. But when we bring the data into QuickBooks, we would account for the Amazon loan, and we create an account on your balance sheet called Amazon loan. And every time you borrow money from Amazon, it's part of the settlement. So we need to account for it, and we would put it in there. We also have a different thing on reserve funds. Like a lot of newer sellers who open accounts in the last 2 years are doing like 200,000-300,000. Amazon, like if they do like $1 million sales in 1 month, in one settlement, Amazon could withhold from them like $300,000-$400,000. So that we have to book separately as a receivable. So on the balance sheet, you'll have the money that Amazon's withholding as a reserve. Plus, you'll also have the money from the Amazon loan. You'll have that as well.
Nice. All right. Now, tell me something. When will this thing be available, if it's not already, for Walmart and Shopify?
So Walmart, we actually just finished. We have actually a couple of sellers using it. It's like our beta testing run. We're probably planning to make it available to the public probably somewhere in the next week. If somebody messages us, we'll sign them up. For Walmart, we actually have a very cool feature, which I don't think anybody is even out there on it, is we calculate the WFS fees. So what happens is most people, I'm saying, if you're just selling at Walmart, you have just a regular commission fee. Now, if you're using Walmart's fulfillment center, which a lot of people are starting now to do it, you need to account for all the fulfillment fees, plus their storage fees and the other fees they have as well. The sad news of this is that Walmart doesn't even have yet an API. They're a huge company, Walmart, but they don't have. We're actually a registered solution provider, service provider with Walmart. And one of the things I had asked them for, if they can, like when you sign up, they're like giving you all the APIs they have available. So we pull the regular APIs, which give us like the reconciliation report and the payment, and we get the orders, the refunds, and stuff like that. But then we ask them, can you tell us like where we see the Walmart fulfillment fees? And they're like, we don't have any API for that. So what they do have is they have like they have for each seller, when you go into the Walmart account, they have their regular, they have like a report, which like a settlement report, which they give available to the seller. So what we did is we built like an import. So you just take that sheet, download it, and go to ConnectBooks, give it an upload, and then we'll just add that all into your settlement, and then you'll have the reports available, and you can export it to QuickBooks.
Isn't it impressive that a company as big as Walmart and every other company in that group, that they do not have an API, and even for sellers to create certain things in our own accounts, we have to set up our own manually and just with some basic instructions. It's there. So
I think Walmart is just living in the past. They're really not. It's very different today to become like, if you want to become like a service provider in Amazon, it's so different than when you want to do it in Walmart. Walmart, we go through interviews, everything. I'm not complaining anything about the vetting process or whatever they do. Amazon vets also a lot of service providers, and they do also audits and stuff like that on their service providers. But Walmart, I just kind of feel like, the whole relationship is something like as it used to be in the past. And it's just like, that's kind of like, I think that the whole company is structured. Amazon is a new company. We founded when the Jeff Bezos started in the late 90s. So, they're kind of always living in the future. Walmart is always busy with huge retail stores, and they're founded 100 years ago. So it's very different to them in terms of transitioning. Besides transitioning to e-commerce, they have to transition their whole, internal system. Like even their registers, if you go to a Walmart store, they still have those little screens. I don't know, my area, they all have these little screens with these little keyboards. It's actually still gray, like the gray ones, the little ones that pop out. Like, if Amazon opens like any of these other stores that you'll see, like they always they put pictures in Seattle, like they would open stores without cashiers.
Yes.
It's going to be some innovative, advanced store where you're going to walk in and just, you don't even have to scan your phone. The writer picks you up from the app who you are and take from whatever you want from the shelf, and they'll just charge your credit card. In the Walmart, it's like so yesterday.
I actually seen that video of one of those Walmart stores. Do you walk in, pick whatever you want, and you walk out, and as you're walking out the door, it will charge you automatically for what that's exactly it. My thought is exactly like yours. Walmart is living in the past, and they're living from the past, and or Amazon only thinks of the future, and that's why they're winning, is because they're only thinking of the future and everything but seller support. When it comes to seller support, Amazon is very, very, but I mean, they're still better than Walmart, because Walmart doesn't even have support. It's, I mean,
My God.
I had support cases open for 6 months with Walmart, and
And then done anything?
no, I ended up closing it myself, because after 6 months, any problem will fix itself. So, wow. So, what's one of the biggest challenges you had to overcome since you started your business? Have you had anything?
Probably the biggest thing I would say would be scaling. People think that you just open up a software company and like from one day to the next, okay, you roll out your main application and then you're adding on new features, adding on new stuff. Kind of the process, like we recently rolled out a version 2 of ConnectBooks. Our version 2 included a complete dashboard where we give you like at a glance last 30 days sales, profits, sales and all these stuff. It was quite hard. People don't realize like for 3 months we had engineers just kind of spending on time of speed, when to roll this out. Now, when I started the company, it was very small. We had like 10 clients and, it wasn't a big deal. When you're syncing data for 10 accounts, you can't compare it to when you're syncing data to over 1,000 accounts. It's not just getting more powerful servers. It's getting the I would say the foundation, like the mechanism, all the code, a lot of stuff, we had to change around a lot of things in terms of scaling. So what's kind of challenging is on one end, I'm always trying to focus on the future and grow the business and invest more in marketing and, bring on new features that's useful for sellers, whether it's going to be whether it was our version 2 of ConnectBooks, whether like, for example, we added on a new feature recently, which we have sellable and unsellable returns. Mm-hmm. We'll tell you which returns are unsellable, and we won't we won't put it back into inventory. We'll expense those returns. Like there's a lot of these little stuff, or whether we can sync orders separately to QuickBooks for FBA versus FBM. Like if you want to keep separate warehousing, so you can see your FBA stock and then see your FBM stock and reconcile it for more accuracy. We added that on as well. There's a lot of like kind of adding all these features, but besides that, you have to deal with scaling the business, and scaling the business in software involves a lot of high qualified, experienced engineers, which know how to tackle it the right way, which usually when you start the company, you don't really focus too much in terms, you're just starting out and you don't really realize, what you're going to get yourself into.
You know what most people think? Let me know if you agree with me. We all watch those movies of any software company. They're Silicon Valley-based companies that they start today. Tomorrow they have 10 million users, and their biggest problem is upgrading servers because they don't have enough bandwidth for all of that. In real life, the biggest issue is not that you have too many users, correct?
I mean, too many users is a good issue. It's bad. Sometimes it's a problem when you don't have business. But the service shouldn't be a big deal. If you're using something like AWS, they charge a lot. If you're using Azure, they charge through the roof. It shouldn't be a big deal to spin up servers. But what I was saying before, it's not so much about spinning up servers. It's building the mechanism to handle the spinning servers and adding stuff like that. It's like, I believe Netflix, they have probably like when they have a certain amount of stream usage, they built into the software to detect that, okay, once we hit this amount of users, spin up on AWS another 10 servers. And when these people leave, turn it off because we don't want to pay for it. Wow. So building out that part of the software is very complicated. And the hard part about it is nobody starts a business to build it out for 10,000 users. Most people started off more at a smaller scale. And then so they build out their software to handle, let's say, 300 users. And then when they hit 300, they have to now build it out for 5,000 users. When they hit like 5,000, to build it out for 20,000. So that part is a constant change, and you have to constantly be ready always for the growth, and you have to constantly redo those stuff.
That's actually fascinating. I'm not a software guy, but I didn't know that existed or that could be done, that increasing the number of servers by every time the number of users increase and then just dropping them after. So that's fantastic. So now the important thing, if anybody that's listening is interested in, of course, they want to automate the part of the tedious part, right? That is the taxes. Where do they find you, or where do they find ConnectBooks? What information do you want to give out?
Just go to the website and sign up, connectbooks.com. Go there. They can just start a chat on the website, or they can, submit a form, and we'll reach out to them, and we'll go from there.
Perfect. And this will be the API connection of this will be one of those that's very easy with 2 clicks of the mouse and they're connected.
I just do when you create your account, you sign up, and then once you fill out your information, the next step is we ask you to connect the store, and then you just have to click, let's say, Amazon. You don't have to put in any tokens or anything like that. It just redirects you to Amazon's page, and you just hit agree. And once you agree and you get from there, we'll pull your information.
Perfect. Nacham, thank you so much for talking to me today and leaving all
before I go, I would like to offer a promotion, or if you're okay with it, I would like to offer a promotion for your sellers and for your listeners who want to sign up for our software. We'll be offering, when anybody signs up for our software, we give a 30-day free trial. I'll go above that, and we'll add an additional 3 months at 50% off. So when they sign up, they're going to have to put in code PC3, letter P, letter C, number 3. So if they sign up, they put in PC3, and then after, let's say you sign up now, you get your 30-day free trial, and then for the next 3 months after that, you'll get it at 50% off.
Wow, beautiful.
And I'm just going to add one little thing, that this code will expire at the end of the month. So they got to hit this by the end of January to sign up. Otherwise, they lose the promotion.
There you go. So, guys, you have, at the time of this recording, a couple of weeks in January 2021. Go to connectbooks.com and enter the code PC3, and you'll get an extra 90 days on top of the original 30 at 50%. All righty. Perfect. Thank you so much, Nacham, and it was a pleasure talking to you.
Thank you so much. It was great.